So, my group will talk about the Wakalah in Bank Muamalat Malaysia Berhad. So, first of all, what is Wakalah? Wakalah is an agency contract in Islamic finance where one party, which is the principal, appoints another party, which is the agent, to act on its behalf in a specific transaction or activity. In Bank Muamalat, Wakalah is commonly used in trade finance and banking services. The bank earns a fee for a service rendered and not based on the interest. The transaction must comply with Sharia principles. There's 5 key principles of Wakalah. The first one is agent contract. The second one is transference fee. And the third one is no riba, which is no interest. And the fourth one is Sharia compliance. And the last one is mutual agreement. There's a 5 steps about how does Wakalah work. The first one is customer appoint bank Muamalat as an agent. Second, bank acts on the behalf of the customer, which is the principal. Next, bank manage the transaction or payment process. And then, customer pays Wakalah fees for the services or rendered. The next one, transaction is completed according with Sharia. Where is Wakalah used in Bank Muamalat? There's 4 trade finance products under Wakalah. The first one is import letter of credit I. The second one is export letter of credit I. Next is import collections I. And the last one is export collections I. There's an example, which is one of the example is customer, which is the importer appoints Bank Muamalat as an agent. The next example is customer provide funds margin to the bank.
I am going to explain section 4, 5, and 6 from our presentation material. This section will give you a clear understanding of Wakalah in Bank Muamalat Malaysia Berhad. Looking at the financial numbers, key differences from conventional banking, and the role of the Wakalah fee. Let us start with section 4. This section shows the financial performance of Wakalah for the financial year 2024. First, look at the Wakalah fee income. In FY 2024, Bank Muamalat made 205.5 million ringgit from Wakalah fees. This is reported under fee commission and other income in the annual report. This money is very important because it is part of the bank's non-interest income and helps the bank become more profitable. It also shows that the bank relies heavily on Sharia-compliant fee-based income instead of traditional interest. Next, please look at the trade finance volume. The total volume on an agency basis reached a huge number of 42.3 billion ringgit. If we break it down, the important business was 22.1 billion ringgit and the export business was 20.2 billion ringgit. This shows that many customers use Bank Muamalat as an agent to support their international trading business. Now let's move to section 5. This section explains the key differences between Islamic banking using Wakalah and conventional banking. This is very important to understand. On the left side, you can see Islamic banking. It is based on an agency contract. This means the bank acts as an agent for the customer, and the bank earns a service fee for its work. There is no riba. Everything is Sharia compliant, ethical, and transparent. On the right side, you can see conventional banking. It is based on lending money. In this system, the bank earns interest from loans. The whole system is interest-based and profit-focused, which is not allowed under Sharia principles. So, the main difference is that Islamic banking earns a fee for service, while conventional banking earns interest from lending. Finally, let us look at Section 6, which explains the role of Wakalah fee. Why does the bank charge a Wakalah fee? First, it is earned as compensation for the services that the bank provides to the customers. Second, this fee is always pre-agreed and fully disclosed to customers before the transaction. There are no hidden costs. Third, this fee is not linked to the amount of financing like interest is. Because of this, it ensures fairness and high transparency in all banking transactions. In conclusion, Section 4, 5, and 6 clearly shows that Wakalah is not only a safe and Sharia-compliant method, but also a highly successful business for Bank Muamalat, generating millions of ringgit in fees and billions in trade volume.
As we have already learned about the concept of Wakalah, its key principles, how it works, and its role in Bank Muamalat's financial operations, my part will focus on the final two sections, Sharia governance and the overall summary of Wakalah and Bank Muamalat. First, let us look at Sharia governance. An important question is, how does Bank Muamalat ensure that Wakalah transactions continue to follow Sharia principles in practice? This is where Sharia governance becomes essential. The first element is the Sharia committee. The committee supervises the bank's products and operations to ensure that all Wakalah transactions comply with Islamic principles and remain free from prohibited elements, such as riba and unethical practices. The second element is the internal Sharia review and audit. Regular reviews and audits are conducted to monitor the bank's daily operations and identify any potential issues. This helps maintain accountability and ensures continuous compliance with Sharia requirements. Bank Muamalat also follows the regulatory framework established by Bank Negara Malaysia and other Islamic finance standards. By following these regulations, the bank can provide customers with confidence that its services are both legally and Islamically compliant. Another important aspect is Sharia compliance certification. This certification demonstrates that the bank's operations have been reviewed and approved from a Sharia perspective, which strengthens public trust and credibility. Overall, Sharia governance acts as a control mechanism that ensures Wakalah remains transparent, ethical, and genuinely Sharia compliant. Now, moving on to the final section, the summary. Wakalah is an important Islamic finance contract in which the bank acts as an agent on behalf of its customers and earns a service fee instead of interest. It is widely used in trade, finance, and banking services because it provides a practical and Sharia compliant solution for modern financial needs. What makes Wakalah successful is not only the contract itself, but also the strong governance and supervision behind it. Through Sharia oversight, regular audits, regulatory compliance, and ethical business practices, Bank Muamalat ensures that Wakalah continues to uphold the values of transparency, accountability, and trust. In conclusion, Wakalah demonstrates how Islamic banking can offer modern financial services while remaining faithful to Sharia principles and promoting ethical financial practices. Thank you very much for your attention. I hope you enjoyed this presentation. If you have any questions, please contact us.